And what President Trump is trying to do is say, look, we don't want the old style manufacturing back. We want to have innovations, technological innovations to stay here in the United States and be sponsored by not just American investors, but foreign investors as well. And what he's trying to do is to say, U.S. is a very attractive place to invest, and tariffs will be one instrument among a set of instruments by which he's going to use to attract foreign investors. Lower taxes, fewer regulations, smaller government, and a tariff barrier against unfair competition. That's the package that he came to be elected on, and that's what he's been putting in place. And I think the tariff policies so far, you just mentioned all the results so far. The countries that want to partner with the U.S. and invest in the U.S. and allow capital to come into the U.S., those are the countries that receive low tariffs. The ones that said, look, we'd rather produce at home because we think we're really good at producing, and we can produce stuff at home that you can't do in the United States, then they face a higher tariff barrier. And that's been the general principle, as you've mentioned, throughout the results that we've seen so far.
So do you think we're going to have a prolonged trade war? Because a lot of companies don't want to do business. They want to see their countries thrive.
Well, in fact, wouldn't call it a trade war. I think it's a political choice on the part of a lot of countries. A lot of countries say, like France, for example, we have national champions. There are banks that we want to protect, we want to promote. There are companies that we want to promote, and we're willing to pay a tariff in order to produce here to promote these companies and to make them much more prominent in the global economy. Malaysia, you just said, also says that we want to protect a lot of our banks, a lot of our financial services. We don't want a lot of digital services coming in from the United States. And so there are digital taxes that many countries have put on American companies because they really want to keep out the extensiveness of American services that have become so efficient and so popular around the world.
Okay, let's talk about the deals and no deals, because Trump got, in many ways, a lot of things that he did want. However, poor nations are really going to take a big hit. And the United States, for lack of a better term, is being accused of bullying its closest neighbors.
I know, and in fact, it could be very easy to make that argument because what President Trump has done in some ways is a mistake to use tariffs to do so many things. There's a rule of thumb that says if you have one objective, you use one instrument to meet that objective. But he's calling himself the tariff man, and he's going to use tariffs to do everything from reindustrializing the United States to try to convince people to use dollars rather than other currencies, to try to persuade people not to trade with Russia for energy. So these are many objectives that he's been using tariffs to try to promote. And I think that's caused a lot of confusion and a lot of reduce the effectiveness of the tariff instrument in order to accomplish its various goals.
That's one of the more thoughtful answers I've heard on that topic. Thanks. Also, economists are pointing out that the deals that Trump does have in place are more like a loose framework rather than an agreement. And China, UK, and EU are being affected. So how's this going to work out in the long run for implementation, enforcement, and such?
John, that's a great point. Traditionally, trade deals take years to hammer out because it's a lot of legal mumbo jumbo involved in trade agreements. But the framework agreement is easier because the principles that are agreed upon is either you partner with the U.S. or you don't partner with the U.S. and you want to compete with the U.S. You're a partner with the U.S. and try to and show a good faith actions that you will be investing capital in the U.S. over the next several years. You get a lower tariff. But if you don't convince the administration that you're going to be investing in the U.S. and buying U.S. products and opening your own markets, but not just U.S. but foreigners to come in, then that's considered something where you don't deserve to have lower tariffs in order to come into the United States to sell. So those are the principles and framework agreements that have been agreed upon. But the nitty-gritty of what do you charge this T-shirt as opposed to this screw that goes into a car that gets shipped out again, those details have to be ironed out over time. And the nice thing about having bilateral deals is that you only have one country to deal with. In the old WTO days, you had to get 20, 30, 40 countries to agree on the same thing.
Okay, we all know Trump got a nickname on Wall Street for his threats of high tariffs, then bringing the number down. Now, this tariff confusion does make it difficult for businesses, manufacturers to plan. And today we saw markets tank over a couple of serious issues, and of course, one being these tariffs. So how difficult is it going to be for Wall Street to continue to navigate these ups and downs? I know that today was his kind of drop dead day, but look, in many ways, this is long from over.
Well, to be fair, Sean, the big event that happened today was the surprising slowdown in the
Right.
U.S. labor market. So that I think accounted for most of the drop in the, because most of the tariff effects have already been priced into the markets. And prior to today, you saw quite a huge recovery and growth in stock markets. So I think, to be fair, stock markets have gotten used to saying, okay, we're going to have a world of tariffs now. Let's work around it and make money with the tariff world. But I think you're right to say that the amount of uncertainty left in the future
Right.
are the remaining agreements that are yet to be done. And I think that's where a lot of confusion is, because China is still out there, as you mentioned, and the state of the EU and Mexico and Canada agreements are not really firm yet. And that accounts for almost half of U.S. trade.
Yeah, and in many ways, these things really haven't hit the U.S. consumer in the pocket yet. And we'll get to that next time, William. But as always, thanks for your insight.
Thanks for having me, Sean.